Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting it down to the closing bell, here to help take us beyond the bell. It's a global simulcast with Massar and Matt Miller. Welcome to our audiences across all of our Bloomberg properties, television and radio originals, and our streaming partnership with YouTube. Massar, a pretty good day here across the board. Almost 2% gains right now for the NASDAQ, for the Russell. Dow Transports floating with a 3% run on the day.
Yeah, and I think that's a really telling index. But overall, we're seeing a lot of enthusiasm back in the marketplace. We've talked about housing before, folks. We had some upbeat housing data once again on this Tuesday, and you see the S&P 500 home builders index up about 3.4%. So we're continuing to see investors move into that sector, Matt.
Yeah, home builders have done very well. We have seen airlines do really well, as Romaine pointed out. We've seen cruise lines do really well, as you pointed out. So I think it's really interesting. It's not just tech leading this rally. Yes, the NASDAQ is doing very well, up more than the S&P, up a lot more than the Dow. But you have a lot of other sectors that are really helping to propel the S&P. So it's broad-based.
It's broad-based, and I look at the number of advancers versus decliners, more than 3 stocks higher for every one that is lower on the New York Stock Exchange. The broadest advance since about 2 weeks ago.
Yeah, I mean, I was just talking about, you look at the top 10 stocks in the S&P 500 that are moving higher on a percentage basis. Not a single one of them falls into the tech sector. It's Carnival, it's Delta, American Airlines, FedEx even in there, Old Dominion, Freight, Matt Miller.
Yeah, well, I think that a lot of those are gaining ground because of the low fuel prices. For example, that was my take on FedEx.
All right, well, we get the closing bells here in New York. A Dow Jones Industrial Average going to finish the day 200 points higher, about 6 to 7% gain on the day. The S&P right now, right around 4,378 and change, about 49 to 50 points higher from where it was yesterday, a 1% gain on the day. The NASDAQ Composite higher by more than 200 points at 1.7%, while the Russell 2000 is going to close out the day higher by about 1.5%. All of the major indices right now hitting what are going to be their highest levels, the strongest day, I should say, going back to early June.
Yeah, it does feel like some enthusiasm, to say the least, in the marketplace. You look at the S&P 500, look at the IMAP function on the Bloomberg, a lot of green. I know we're going to get into the groups in just a moment. But having said that, Matt, if I look at the S&P, you've got 414 names to the upside gaining ground on this Tuesday, 88 to the downside, 1 unchanged. So definitely overwhelming.
Which one's your favorite
sentiment. One? Which one? I don't know. I have to think about that one. I like Newell Rubbermaid. Like, that's an old-time company, right?
You and my wife.
Tupperware company, right?
Yeah, Tupperware.
Who doesn't need that stuff?
We got a lot of Tupperware at our house. All right, I'm taking a look at the groups, and you can see that IT now is leading the way. It was kind of neck and neck up to the bell because consumer discretionary was also doing incredibly well. And Romaine, as you pointed out, a lot of those names, in terms of percentage gains, were really at the top. Royal Caribbean is consumer discretionary. Tesla is also in there. Pulte Group is in there. Amazon is in there. You would think that's a tech name, right? But Amazon.com is in the consumer discretionary group. Of course, IT winning out at the end of the day. And I think it's interesting, Romaine, you pointed this out earlier, that energy wasn't a loser today, even though we saw oil prices come down. I will point out that if you looked at this GRR year to date, instead of on a one-day basis, energy is clearly the biggest loser of all the groups.
All right, so let's get to some of the individual gainers, if I may, in today's session. So we talked about Carnival. We've talked about the cruise lines really outperforming today. Carnival bounced back, really gaining back all of its lost ground yesterday after it reported earnings, and even though they outperformed in terms of their results, investors were disappointed considering the run-up that Carnival shares have had this year. But nonetheless, Carnival up almost 9% in today's session. You had a lot of analysts also coming out, increasing their price targets on the company, but the whole group was definitely having a bullish day. Let's get to Generac Holdings. This was your number 2 gainer in the S&P 500, just behind Carnival. That name up about 8.8%.
Texas, anyone?
Yeah, exactly. It's a portable generator manufacturer, seeing demand for backup power jumping amid that heat wave scorching in Texas. So we just talked with somebody out of Houston saying everything seems to be working, but nonetheless, there is a lot of stress on the grid, and so people are going to be tapping into their backup generator. So that one's certainly outperforming. It's up more than 40%, by the way, this year. Charter Communications, don't know if you noticed, but number 3 gainer in the NASDAQ 100. 2-day rally of about 8%, up 5% in today's session. Heavier volume than usual. This is the White House said yesterday that it's going to allocate more than $42 billion to provide affordable and high-speed internet access across the U.S. by 2030. So we saw investors, Matt, moving into that and some other names in that group.
All right, I'll pick up the decliners here because Walgreens was the worst performer in the S&P 500, lowering its full-year guidance, saying that there is less demand for COVID vaccines and testing kits, which is reducing foot traffic, while its transition to healthcare is taking longer than expected. CVS, which of course has moved faster than its rival to healthcare services, also falling in sympathy. Illumina, another big decliner, the gene sequencing company looking to cut $100 million in expenses by reducing headcount and its real estate footprint, especially at a campus in San Diego. And Thermo Fisher Scientific off by 2.4%. This is a company that makes scientific instruments and chemicals. And Barclays has lowered its price target to $590 from $610. The stock closing down 2.4% to a 7-month low.
Yeah, and I'll just add one more. Regeneron actually had an awful day, worst day going back to March of 2020. And that was largely on some news across the wire just a little while ago with the FDA failing to win regulatory approval for one of its key eye medicines for macular degeneration. Let's take a quick look at what happened in the yield space, because we did see a sell-off there on the back of that better than expected economic data. Remember, it wasn't just housing, it wasn't just consumer confidence. Even some of the business spending, the capital goods stuff was actually came in a lot better than expected here. So there are a lot of signs here that maybe the economy is holding up here, and that's causing a lot of shifts, not just in equities, but of course in the treasury space as well.
Soft landing, anybody? I mean, it does make me wonder, might Jay Powell and company be able to figure this one out?
No.
In terms of managing the economy, maybe not into a recession, maybe, slower growth at some point, and but nonetheless, keeping the economy, the momentum moving. I think we do have to watch any data points, though, when it comes to consumer spending, because it's so important to the economy.
Yeah, I mean, the consumer is key, but I think a lot of the help he's getting is with as we were talking about, the 30-year fixed rate mortgage. And then Torsten Slok sent out a chart today. By the way, I have a button on my Bloomberg for emails from Torsten Slok at Apollo Group because they're so helpful, showing that the quality of auto loans and the quality of mortgages that have been originated today and over the past year are so much better, such high quality compared to what we saw during the GFC, which is why we're not seeing the breakdown that we would have then.
So regulations worked.
Or
right?
companies have learned their lessons.
Yes, banks have learned their lessons, exactly.
I was looking at the economic surprise index, and I was talking earlier about how it's been a straight line up. It's gone up yet again because of the data dump that we got today, and is now at its highest level since April of 2021. So the data continues to surprise, and people are saying, I'm not going to worry about the Fed.
Not going to worry about the Fed. Of course, I don't know. I guess do that at your own peril. Obviously, we talk about some of the distortions heading into month end and quarter end, but this kind of sets us up, I think, for what's going to happen. I think when we come back from the 4th of July holiday here in the United States and you get into an earnings season where you have to now refocus on some of those corporate fundamentals on the back of multiples that, at least for some of these names, are well above historical averages.
I guess I'm trying to balance out, too, that if inflation is easing and the input costs for a lot of companies are going down, then that maybe gives them some wiggle room in terms of maybe not having to let workers go, because that's what I really think I'm keeping an eye on as well, is the labor market.
Or their profit margins expand.
Right, exactly, right? They can maintain their profit margins and don't have to cut costs elsewhere. So I think that's what's going to be key for me in earnings in terms of what are their costs and are they able to hold on to workers, even if they start to see some softness in their business.
Yeah, and in particular, what banks say about credit quality and, of course, how people are paying back their loans, especially servicing their credit card debt.
I'm very focused on credit quality. I still have to buy my Dodge Challenger Hellcat Red Eye wide body, and I got to take a loan for that.
Romaine,
we need a picture, by the way.
Romaine, maybe we should all go be an intern at Citadel.
Oh my goodness!
I heard they're paying pretty well over there.
$120 an hour.
If
you put in a 60-hour work, you're making $7,200 as an Intel in a week.
In a week, we figured out almost
$30,000. You get to live in Florida too.
Almost $30,000 a month. So you're talking about $60,000 in 2 years.
Right.
I mean, in 2 months.
In 2 months. So yeah, that's pretty good for an internship, right?
Yeah, and
that's good for a regular job, dude. That's $350,000 a year.
Trying to tell us something? Are you Matt? Are you applying to?
Carol and I have already applied. The problem is we have such competition. Ken Griffin has gotten 69,000 applications for this year's intern class.
Is that a sign of the times? What is that?
I don't know.
You've got to apply for next year, Matt. That's your best hope right now.
Be careful down there.
I'll be 50. You think that's too old for an intern?
No, we can make a movie off of it.
All right. We got more data to come, guys, and we'll see how that plays out in the market. I know. Can you believe?
I know.
When did that happen?
I've got macular degeneration.
Our little boy has grown up.
He's young at heart.
All right, guys. That's a wrap. Our cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. We will catch you tomorrow.